balancing the business growth with the integrity. So participating in our webinar today, I would like to introduce Madam Amara, the council member of the ICB, and Mr. Hank Coy, the general manager of the ICB. And from the IFC, I would like to introduce Mr. Jing Chang Lai, the Principal Operation Officer responsible for financial infrastructure program across Asia and Pacific. I also would like to welcome our distinguished speaker. So today, Miss Pauline T, a seasoned banking practitioner with over 27 years of experience in consulting, analytics, and banking across multiple countries. Pauline has a proven track record in risk management, digital system, debt collection, and bank training. In this webinar, Ms. Pauline T will cover the key aspect of good collection practice in micro and retail finance, including the practical, the strategic, common standard, and case studies. So to start with our webinar, so I would like to invite the representative from the Association of Banks in Cambodia to deliver opening remarks. So now the floor is yours. Thank you.
Thank you very much, Huyen. Yes, on behalf of the Association of Banks in Cambodia, we would like to warmly welcome our guests, Mr. Jing Chang Lai, Madam Fu Tofika Hook. I'm sorry if I may spell her name not correctly. Who the resident, country resident of IFC in Cambodia. Mrs. Pauline T, our speaker today. I think we honored to have you as highlighted by the Huyen. We believe that we will learn a lot and engage and discuss from this very important topic. Jing Chang Lai, who very active to make this webinar happen with the Association of Banks in Cambodia. And I also would like warmly welcome to everyone. I think there are many participants registered, but maybe they need some time to connect. Actually, more than 100 people register from banks, microfinance, and a few are from development partners. So everyone, we warmly welcome you. And I think this is the third webinar, which focus on, I think it is very a hot topic in regarding to debt collection, good practice in regarding to how we can do our lending better. I think it is one of the important topics. And I think the first one we do, the first webinar focus on risk conduct, and the second one I think we focus on ombudsman. And I also would like to inform all participants that this kind of webinar is in line with the code conduct of the banking and finance in Cambodia. And also it reflects to most of the principle in our code of conduct. And also this kind of webinar is a part of capacity building to our banking sector. So once again, I do thank to the IFC and also the esteemed speaker, and also we thank to everyone who actively engage and participate this kind of webinar. And we try to make this webinar be more highly contribute to exchange and also capacity building to our banker. Therefore, we also wish you all to have more engaged, because you can engage through our chat box. And then I think at the end of the session we can exchange and respond by our speaker, and also from the team of IFC Ching Chang Lai, and the rep from the IFC in office in Cambodia also. And then at the end of the session we also have survey, quick survey, in order to hear the feedback, particularly not to evaluate our speaker, but to hear what you learn from the session, and also what you wish to have topics for the future webinar. So again, thank everyone, and warmly welcome for the third webinar. So thank you very much. Thank you.
Thank you very much, Mr. Heng Khoi. So now we will go to the real agenda for today. So during the presentation of Miss Pauline, so if you have any questions, so you can send to the chat box, and from our team, so we will collect the question and we will try to answer your question. So now the floor is your Miss Pauline T. So do you want to say the presentation from your side, right?
Yes, that's right.
Yeah. Okay, thank you. The floor is yours.
Okay.
Thanks a lot.
Hi, Huyen and Pauline. Sorry, before Pauline start, I just want to inform the participant that we have translation, simultaneous translation for this webinar. So participant, if you want to listen to the webinar in Khmer, you can click the more buttons, and then there will be option for you to choose language, which is Khmer and English, or the original speaker. I understand that normally we want to have pictures as a record of our webinar as well. So I would like to ask every participant to turn on the camera for quickly, so our host can take some screenshot to keep as a record. So Udam, please proceed with the photo taking, and then when you're done, please let us know so Pauline can start.
Thank you, Dr.
Yes, thank you. I see more and more people turn camera on. So Udam, please start taking photo, please.
ខ្ញុំខោនផងបើមិនចឹងទេញញឹមស្ងួតអស់ដំ
Okay, thank you, participant. We make it already. Thank you.
Great. Thank you, Udam. And yes, please. So now Pauline can start the presentation.
Okay, let me share my screen. Just give me a second. Seems to have some issue. Kimara, would you please share screen for me? For some reason.
No, Pauline, go to more, lower right hand side, more, and then click on share.
Yes, I did. Let me try again. Give me a second.
Share, your sharing is turned on. Can IT person turn on for Pauline? So the sharing function had to turn on for Pauline.
Yeah, we turn it on. Actually, Pauline is a co-host.
Okay,
So click on share, and then you click on the screen, and then open out that particular document.
Okay, share. Okay, I got it now. Just give me a second.
Yeah, it's coming.
See my screen?
Yeah, it's coming.
Okay, you can see my screen?
is on the way. It says you starting.
Mhm. Okay.
Yeah, is here now. Got it.
Okay, got it.
I got
Good.
it also, yeah.
Okay, thank you. Thanks, first of all, thank you for having me. Thanks to Association of Banks in Cambodia, and also IFC for having me here. I think it's my honor. The honor is mine to be here, to be able to share my experience. Hopefully, you can find benefit from it. Just a quick introduction about myself. I've been in banking for over 27 years, predominantly in the retail banking sector, including SME. Which I spent about 15 years in collections, where I provide consulting, streamlining collection policies and processes for automations. I joined a bank, an international bank, where we have collection operation in 33 countries. So I do face quite a fair bit of steep learning curve with them, because you probably experience a crisis once in a few years. But when you join a global bank like that, where they have footprint over 33 countries, 1 year you can have multiple crises because they come across from different countries. So there was a lot of learning from there. I wish I can share that with you today. Okay, without further ado, I'm going to move to my next slide. So let's have a look at what are we going to talk about today. So I'm going to talk to you about the importance of good collection. What do we define as good collection standard? What do we mean by that? And why is it so important? And I'm going to share with you some strategy that I have used before, or I have heard, or I've seen some other banks that use it in their markets, and I will share that with you. And most of all, I will demonstrate those practices that I share with you in 2 cases. So I have with you today one success cases on good collection practice, and one where things could go wrong. Plus, on the good cases, actually, I'm personally involved in that. So I'll share that with you very soon. And what is the objective we want you to take away? I really hope that by, when you leave us today, it leave with you a good understanding on, or maybe you already know, but reinstate the importance of having good practices, responsible lending, because that is key. And I would like to also share with you some of the strategy, and hopefully you can find them useful and maybe adopt in your institution when you go back. And we demonstrate that, like I say, in real life cases. Okay, so in the chat, can you just give me put in yes or no? Would you agree that trust is the key drivers that our borrowers has? Would you agree with that? Good, I can see it. Yep. And also, thank you, the answers are coming in. Would you also agree with me that generally customers are good payee? Yes. And last one, and would you agree with me that I always say this to a lot of people, the best collection strategy is to have a good, sound credit policy? Yeah, good. Everybody is in agreement with me. That's very good. So literally, this is one of the key message I wanted to highlight with everyone today, because if you really want to have good payment patterns, or your customers continue to pay you, because ultimately, when we provide credit facility, we will only make money if the client serve the interest and pay us back the outstanding amount, right? So it's important for us to have a good, healthy portfolio. So when we provide a good service, or maybe I would say responsible lending, we work with the customers, understanding what is their needs, work out the loan that they can afford. And also when we go back to them and ask them to make payment, because sometimes time are bad, they do need some help. And we are professional in our approach. We not only build trust, we retain the trust. And because we retain the trust, the customer will come back and have business with us. So protect that trust. That is very important. And also protect that reputation. Think about how much money and time you need to spend just to build your reputation, right? And all you need is just one very serious case, very serious complaint, incidents, and you would have lose those trust that you have built over years and cost you millions. Okay, so I think you probably would on the consequences of aggression collections. I think this is not new to you, but we just want to reinstate. Typically, when you have aggressive lending, because aggressive collection come after aggressive lending, you would have under a lot of stress, and collectors may tend to be a little bit more hostile because they may get frustrated because of the client or the borrower who say, I'll pay back, but eventually many times they don't pay back, they get frustrated. So they may start to be a bit more aggressive, and then that would create customer distress. And when customer get nervous and distressed, they want to borrow more money. So in a way, that behavior will instigate higher indebtedness. Okay, and reputation is key. I shared that earlier. So we need to protect that. And this, when the market start to show signs of stress, a lot of customer complaint, the regulator will start coming in. We see this pattern again and again across the different market that I've been servicing on. I remember when I first started collection, that was back in year 2007. And that was a credit crisis in Asia. A lot of country was having credit crisis. So I see that patterns. When regulation was started, were not strong. We have very aggressive lending, indebtedness happen, aggressive collections happen, complaints happen, something disaster happened, then the regulations start tighten. So eventually we became a better financial system. Okay, moving on. I just want to further illustrate the point that I highlighted earlier using some statistic and look at the landscape of microfinance in Cambodia. This data that I presented here, they are from a report from Mimosa, which is focusing on the understanding the microfinance index for market outreach and saturated situation. Although the data is a bit old, back in March 2020, but it's already give us a very good indications. Although it's older in 2020, what I would like the audience here, when you go back to your portfolio, have a look across this indicator that I'm sharing here and where is it for you today, okay? So we're seeing a high penetrations on credit where the rate is between 21.8 to 34.9% in terms of the borrower per 100 adults. And this has provided Mimosa to give you a high saturation score. That what it means is when you have a lot of people borrowing money, while it can stimulate economy consumption, but what very, very important factor to look at is the income growth at the same level. So I want to bring your attention to the top chart on the right-hand side, where while the increase in borrower seems moderate, 14%, not too bad, but what is more alarming is the amount that it has increased 158% over that 4 years. If you compare that to to the raise of income, you know, just do the research in your market. If the income doesn't go up as much as 158%, you will know the customer likely cannot afford this loan. And what they could likely do is because there are maybe because of high competition, credit is more easily available. And a lot of our borrower, a lot of time, especially in the segment that you are looking at in microfinance as well as the smaller retail banking, a lot of time, even some retail banking customer, most of the time, customers are not financial literate, meaning that they don't know how to manage our financial properly. A lot of time in my past experience, when I try to find out from the customers why they're so heavily in debt, they didn't realize. They really didn't know that they are so badly in debt. We have one example where when we talk to the customers, we say, do you know you're outstanding? He didn't know. When we highlight to them the full amount, he was shocked. did I owe so much money? Okay, so a lot of time do help the customers to understand. Okay. I want to bring your attention to the lower bottom chart of on the right hand side. You can see that while people basically the populations on the borrower that on the lower smaller amount is now migrating to the higher tier, which is the higher amounts of the charge. If you go back to your portfolio, what I would like you to have a look at, because understanding your portfolio is a very key part to make sure you eventually get your money back or have a healthy portfolio. If you look into your portfolio and see how they have shifted from when they used to borrow smaller amount and what are the amount today, and then if you can check back against their income. If you have collection call or normally customer service call, you can always just ask back. A lot of time we do the credit assessment at the beginning when we first bought loan, provide a loan to the customers, and then we forgot about it over time. So when you do observe that the customers seems to borrow a larger amounts or the level of the numbers of product that they have increases, do check that on their income to see whether they has increased. What these two charts show is more and more people are now having higher balance. If their income couldn't cope with the higher balance that they borrow, that means their ability to absorb shocks has much lower. So if you look across your portfolio, you can label them based on the level of risk, meaning that if they have high indebtedness, high outstanding, the frequency of payment start to not being regular, the payment start to show irregular, and the income is not that high. These are the ones that you want to take at high risk, and you want to be able to talk to them when you see some signs of not being able to pay back. Okay. Now, this is another slide using different charts to show you what are the potential warning signs that you can see. While for basically when they take out a bigger loan that they can't afford, that's where they need a longer time, a longer tenure to pay back. So when you see a loan stretch out over a longer time, although the monthly installment amount come down, but that not necessarily means it's benefiting for the customers. It may create an illusion for the borrower as well. They thought, smaller amount, I can then borrow more. So it's a human behavior. It's a pure human habit. If they need money, they'll go and borrow more. But that would mean that they now are in debt in a much longer time. Okay, if they want to free up the capital to go and do something else, it becomes harder for them. And also, in the bottom chart of the left-hand side, this indication of core borrower, which is also expressed in the report. Core borrower happens when a single person can no longer offer the loan that you provide to them. So core borrower doesn't give you much guarantee. It also shows signs in the market that we are now starting to indebt the customers heavier to the extent that probably they cannot afford. So do take note of that. When you have such indication of more borrower, customers borrowing more loans in unique customer, individual customer borrowing more loan, this means the ability to pay has drastically reduced. So the ability to absorb shocks is also reduced. So these, again, I want to call out a good collection practice is very vital. And a lot of time when you see situation like that, a stronger regulation would need to be in place in order to support sustainability of the market and also to protect the borrower and to reduce potential abuse, okay, or exploitation. Moving on. So while I'm continue talking, do take note if you have any question, jot them down where I can, I will answer. So I will leave about half an hour towards the end to answer your questions. Okay, so what do I mean by good standards? Very simple principle. Be transparent. When be transparent, not saying that you tell everything, how you do your credit policy, who do you approve, not that. Be transparent to the customer in the sense of they should clearly understood what are they getting into. How much fees are they paying? How much is it to cost them to take this loan? And what is their affordability? Ultimately, we're working out what is their dispensable income. Okay, a lot of time customers do not know. By telling them, you do need to highlight, help them understand what it means. Be fair to the customers, understand the situation, and help them to find a solution. Sometimes customers just, they run away or they avoid, they keep broken promise that they'll pay, they don't pay. It is not that they do not want to pay. It's just they do not know how to handle their situation. Okay, we need to respect the customer dignity. Customer-centric approach, I'm not sure whether you have considered that. Customer-centric approach, what it means is, within the institution, you can look at the unique customers, how many borrowing you're offering to the person, or total outstanding amount this person has. The market actually do receive a lot of benefit if the credit bureau can provide to them the total outstanding amount of a single borrower. Back in year 2010, year 2011, we started to see in Singapore, we started to see a lot of customers where they're heavily in debt. The regulation came out with some restriction that the maximum unsecured credit limit of a unique customer can have is 4 times their salary. Okay, so because sometimes they will serve the service, they pay overtime, so it's 4 times, and then that helped the market. And the credit bureau shows across all the bank, of course, they don't tell us what's outstanding balance per bank, but for each unique customer, total outstanding across all the bank. Well, of course, when the customer is so heavily indebted, if they were to take loan from an unofficial money lenders or the traditional money lenders, those kind of data will not be shown in the credit bureau because they don't contribute to it. So a lot of time when you start seeing customers who have show signs of irregular payment, their indebtedness is actually more than what you have in your data. So they are in more serious situation. Okay, so ultimately a good collection standard, what we're looking for is also consistency. Because when you have a large operation, you have a lot of people who are on the ground helping you to work with the customers, collecting back the money or talking to the customers to bring back the money. We need to teach them that you need to understand the situation, be empathetic, but at the same time, you're exercising the institution right to bring back the money. Having a good framework help you to have a consistent language, and also not only for your own staff, but also you would be having collection agency. The collection agency should also receive the same kind of message, and they should also abide by the same code of conduct and live by the value of the organization, because they represent us. When something go wrong, the regulator will not look at the agency or say, hey, what did you do? But it does look for the institution that engage this external agency, because they represent us. They're just a standard resource. So a lot of time, some of the good practices they have in the market is they have code of conduct. So they will have code of conduct to very clearly outline what is the rate or what is the values of the organization, what is a good practice, how to treat the customer fairly, okay, especially in fast-growing market. And community relationship. So it's important while we go out to exercise our institution right to get money back, but we also need to maintain that strong community ties. I think Cambodia in the market the community have very strong tie will benefit this aspect. In some market, it may not have this benefit that you have. So sometimes when you demonstrate the assembly case where you supported somebody, overcome their financial issues and help them to recover from their situation and being able to pay normal, that good word will spread across, right? You can also use that to help you market your institution, because trust is very important. It's your most effective marketing. Okay, now expanding on framework for good practices. What do I mean by earlier? Just a few points. I've touched on quite a lot of this. A code of conduct, you may agree is good, but remember, a code of conduct should have simple, maybe maximum 10 codes that you want your collectors and your agency to remember. If you have too many very complex rules or code or requirement, it becomes very difficult to understand. And the other things that while we get the collectors or the employees at the start, they sign up to the code of conduct, they understood what it says, but over time they may forget. So one practice that we have in the company that I worked for in the past, we implement an annual refresh. So annually we get the collectors to come back in, and then we talk to them about, do you remember this code of conduct that you sign up? Remember, this is the value of the organization. This is our value behavior that we all, okay? And again, emphasizing it provides a consistent message, which I've highlighted earlier, not only within the organization, but also to the collectors that are in the agency that helping you, okay? So some strategy that is supporting on good collection. I mentioned earlier about responsible lending. So assess the borrower. While you may outline the conditions or the fees and costs, these are the payment terms, etc. But do help them to understand. To some extent, maybe find out from them what is your compulsory expense. Let them understood. If you're going to take out this is what it means. That you need to constantly allocate X percentage of your payment or your income into this. So help them and help them also understand this is their commitment, because we have some, I experienced on my personal experience that the debtors feel that you are the professional, you're the bank, you loan me the money, you should know how much I can afford. Why did you keep giving me the money? Because when a person that is heavily in debt, they need the money. When you gave them the facility, they will take it. They don't care. So do work it out with them. Let them commit to what they have or attest to what they have committed so that they will fulfill. It's a personal accountability. So as your portfolio grow, you will have to get ready in play on some repayment plan. Now, repayment plan to me is like a drugs. Once you start having it, it's hard to get off. Or some incentive like fee waivers, etc. So you need to be very careful. You need to quantify the customer that qualify for it and what are you doing for it. We see some bad practices in the market where I work for. Sometimes under pressure, they may roll over the loan instead of write off the loan or let it flow through delinquency. That basically is you're just hiding the bad portfolio, become a time bomb. When the economic crisis hit or economic shock comes, the whole pool of that group will fall and your delinquency will just shoot up. So be careful not to do that. While you're providing your lending, do also engage with the community, okay? Provide training, provide education, let them understand what does loan mean. When you take out a loan, there's interest. You need to make sure that you have stable income so that you can continue to serve the loan and then continue to live a lifestyle that you wanted, or continue to help the business or the farm that they are investing the money in. Ultimately, when the customers come to us, they are in a way investing in us, that we will provide that supportive platform for them so that they can grow their business, grow their farm, and make a better life living going forward. So we're in it to them with them together. So do make sure that they understand that. Okay. Be flexible when handle a default. I do know in the market sometime, maybe not practice in yours market, but in some market, they will have penalty fees to try to, in a way, motivate the customer to pay back. Because if they go into delinquents, they will pay a fee. Now, fee will only work at a period of time. Maybe the early delinquency, then the early sign of showing they're not able to pay. Because later on, when they're so heavily indebted, the fees charges that you charge on them is actually increasing on their burden. And then it making it harder for them to pay you back. Either they run, they're absconded, or they get themselves into even more trouble because you're just adding more cost to them. So and then we lose the money, because if you can't find them, if you have the charge-off policy, you have to write off the loan because the payback is so bad, and you will increase your loss rate. Because ultimately, if you want to protect your investment, is to make sure they can sustain with their business, they can continue to make income, and then they can work with you. Okay, so increasing those penalty fees unless at the later stage is not a good idea. Okay, at the end of the day, you need to understand your portfolio. I gave you some example earlier. Look into your portfolio. You can look at a few indicators. Do they turn into delinquent or start being overdue at the early stage of after they take on the loan, after the disbursement? You can also see if the irregular payment or they only serve interest. These are all signs of high-risk portfolio. Label them and manage a different strategy against them. For the other customers that can maybe just forgot, treat them well, okay? You have to have a tactic strategy based on the risk profile, risk-based strategy that is very good. So eventually it all come down to the affordability, okay? There's some scheme in the market that you can see here is the so sometimes we have payment holiday when you have natural disaster, when you have crisis like COVID-19. In the matured market, sometimes I do see regulators step in when it's so heavily indebted, the situation, they will request the institution to provide restructured loan, which have a debt repayment plan, flexible scheduling. Sometimes because the loan is so, the outstanding amount is so big, you can't, no matter how much extend the tenure, there's only maximum you can go to. You may have to give some discounts, okay? And fee waivers. So the practice is always waive the fee, waive the charges, and then look at what's the outstanding, because at that point, you only want to recover your money back. And understand your credit portfolio is also very important, because you already know within your portfolio, you're going to have some loss rate. And this group of customers that couldn't pay back likely fall in within your loss rate. But so it is okay that you can afford to give some discount at that stage when your portfolio is big. Okay. So we're gonna go into this case study. The first one is on positive collections. We left it about, okay, good 15, 20 minutes. Let's focus on this, then I'll open the floor for Q&A. Back in 2010, if you are in the banking industry, you know during that time, it was recovery state from year 2008, year 2009 Lehman Brothers crisis. Across various Asian countries, many governments came out with a stimulus measure to try to beef up the economy recovery. Banks start to relax their credit policies and providing very creative credit facility. Like I said earlier, when the person is heavily in debt or when they need money, they will go for credit when you offer to them. So we start to see signs that those customers that was badly impacted during the crisis, when the economy start to recover, they're still heavily in debt. So when policies start to loosen up, they start to get more credit. We see customers that are going beyond 5 times. Actually, I put down here 2 to 5, but there are some, the extreme one, sometimes 16 times. How did they get there? Beats me, right? So it comes down to responsible lending. It's very, very important. And they start to seek for relief program from the local government. For those country, some of the country, they have relief program. And in one country, they implement a revision on the solvency law. Basically, if a past customers or if a borrower that's so heavily in debt, they cannot continue to provide the payment, they can seek government help where a legal will comes in, a legal will comes in where they will judge whether this person is indeed so heavily in debt and they can go into bankruptcy. So it's a status that means all banks or all credit lenders stop your collection activities. Nobody can chase, and then they will allocate the person's asset or across the biggest debtor, biggest creditor first, and then eventually down to the smaller ones, and then work out a plan where the customer will continue to pay. This kind of situation, most banks will have to just write off, take full loss on those because the payback can be very, very long. They revised the policy. So suddenly a lot of people see that, oh, there's a way for me to get relief. So we suddenly see a surge of customers apply for bankruptcy even before they show signs of delinquency, meaning that there was no overdue, and then suddenly they apply for bankruptcy, and we received the notice from the law court that this individual had applied for bankruptcy, stop all your collection. So normal collections strategy cannot work in this situation. High loss rate. So at that time, I was in an international bank. My boss came to me and said, Pauline, we need something different, not the usual. So we decided the important part, like I said, is about affordability. So we create special task force team across our key markets. And we took the top collectors because we need good negotiation skill and people who will listen to the customers. And we give them very clear objective. They have no KPI, they have no target on recover amount. What they need to do is contact the customers, understand their challenge, work out their debt burden ratio, meaning what is the total debts, what are compounded expense, work out if they have any more disposable income, and we work on a restructured loan with them. And sometimes if the customers had multiple loans, we even contact the other banks, because in some country there is a banking association and people do gather occasionally. So we know who are our partners in the industry. So we will contact them. Of course, before we contact the bank, we get the consent from the customer. The customer will have to give us the consent that we can contact the other banks or the other institution. And then we together, we work out a restructuring for them, because if not, it's not going to work. Because what will happen is we may give them some leeway and pay slowly. The other organization, the other institutions pressure them, the money will go to them. So we need to work together in order to save the customer. Okay. So what we saw with this strategy was over 90% of those high-risk portfolio. Oh, I forgot to mention the high-risk portfolio on my definition on this strategy that we implemented was we use model analytic to mine, to look at what are the customers that could likely go into the write-off state, the charge-off stage in the next 3 months. In the initial state, we find out that we can still save the customers. But then later on, we realized that they're beyond saving. So we actually changed our high-risk portfolio to say, if they're going to show signs of stress, then we go right off in the next 6 months, because we need to reach them even earlier in order for us to try to help them to reduce their situation. We won't be able to reduce the debt, but we will find a way to support them. So over 90%, in fact, 90%, close to 99% of those that we have successfully converted to a restructured loan, they continue to make the payment. There was no default rate. And they don't go to the bankruptcy. They don't need to take government repayment plan. And not only that, we even have customers who call us, apologize that he's going to be late tomorrow on the payment plan because the underground money lender is at his door and he had to pay them first. Now, when have you ever have, maybe for the retail banking, more microfinance, maybe you have it, but retail banking is very rare. You see customer calls and say, I'm sorry, I can't make my payment tomorrow. That is because of the relationship that the collectors have built with these customers. They work with them in finding out what is the challenge and work with them to find a workable solution, including helping them to talk with other banks. So the relationship we built with these customers is very strong. And they gave us very, very good praises. Even they put it up in our website, in the newspaper. They say that they never ever have worked with a bank that on the ground working with them through their challenges and supporting them. We also have those there are customers that would be unsafe. I mean, the tenure to restructure loan is too long. We don't want to hide our losses. So for those customers that is so badly indebted, we write them off, and then we gave them a workable loan, very, very long, so that they can pay back. The good news is they remain contactable because we walk through the process with them, we make them understand the situation, and they pay back. There are people who recover from charge-off, meaning they clear their debts, and then they came back clean after a few years. Okay, so what we also learn through this process is we learn to some issues about our policy. We use a lot of automation in our credit approving, so therefore there's certain old policy that we have put inside the automation, but we forgot to remove. By talking to them, like spending time and really understand their problem, we realize some of them is our own policy that we need to fix. So we actually, when we fix that policy, we prevented future customers from being indebted. So actually, overall, it contributed a lot to the health of the portfolio. Okay, so lesson learned, which I guess you can hear from me, and also my passion. I'm somebody who very much I like collection because I think it's both an art and a science. Majority of the customers are good paying. They want to pay. Nobody likes to be in heavy indebted. So customer educations on financial management and soft collection doesn't mean you go soft. It's more of don't use hostile. You can be firm, you can be positive because it's still your right to collect back the money. But you don't have to be like not confident. That will not be a good message to go to the customers. I'll talk in another day in separate topics on collection tactics. Build trust. I think microfinance, especially if you're rooted into the community, I think you have that competitive edge as compared with retail banking. We can't afford to do things to do that, to be at the root with the customers. Building trust, respectful treatments lead to higher repayment rate, as we saw, and it also build a longer term relationship. Empowerment. Okay, empower your customers with good trainings program and help them to understand, because they need to be able to continue to make a living in order to pay it back. Okay, I'm going to leave you some question here to reflect on yourself. We can talk about this right in the Q&A, but think about it. Do you think this strategy relevant to you? If you like it, what are the potential challenges? There are challenges. We can talk about it later. Okay, now this is another case where things go really, really wrong. This is based in India, SKS Microfinance. This organization, if you just Google or you ask ChatGPT, you can easily find this. There are case study, a lot of case studies on this case. Even institutions use them at school. Okay, so SKS was established in 1997, and then by Vikram Akhura, and they decided that they want to go IPO. So they were one of the Indian largest MFI. Initially focused on social objective, but then they decided to commercialize on their customers, and that's where things started to go wrong. Of course, before that, before they went IPO, in order to beef up their profile, they were aggressively lending. So they were aggressively going out to the customers, resulted in overburden many of the customers. Say, I mentioned earlier, the customer's financial literacy is low. They do not know they're taking too much loan. They do not know what is in it for them. What are the challenges they will face when there is an economic crisis, or when suddenly maybe things change, emergency in the family. Okay. And so the thing started to crash around September in 2010, even though they went IPO in early 2010. The share prices was very high, but it drops in a few months' time. Around September and later part of the year, then things start to go wrong. There were crash between the customers, the borrower, and them. Also in the market, the customers, the borrowers are just too angry that they hear a lot of news on people started to suicide, the farmers. So they kill themselves, and then they get too angry. That is on my second page. There is violence happening between the institutions and the borrower, and there are also violence happening between borrowers and borrowers. And there was a lot of issues. Although that time I was working for international banks, we do have presence in India, and even then our retail segments was badly affected because the market was just too angry. There was lots of violence. Our collectors from the retail banking went to collect money because the customers called him to say, can you come and collect the money from us? He went, and they beat him up and threw him on the roadside. And then we have to put him on hospital. The poor collectors were so shocked and terrified. After one case, we were informed, we immediately put up a security measure. So we came up with guidelines to our collectors that do not travel alone, travel in pairs, let us know where you are so that we would be able to support them. In fact, when the collector was beaten up, they actually kidnapped him, locked him out in the room for 4 hours, they beat him up and then throw him on the roadside. So it's a very terrified case. So within, I think, the same week or the second week, we have the second case, even though, and the second case, very poor thing, and this is not a collector's, it's just one of the bank employee. He has a bank, the staff pass, and somebody walked past and said, you work for a bank, and then he got beat up. So we decided to stop few collections for a few months. And obviously the bank had to take a lot of loss because in country where payment channel is not readily available in many places, for us to stop going to do few collection, we lose getting the money back. Of course, some customers will take advantage of the situation, but the whole situation was total chaos. Okay, in that situation, the regulators started coming in, and then they have to implement some tightened measures. And it actually not only paralyzed the India microfinance, it also had great impact on the retail banking as well. Okay, so lesson learned here is aggressive lending, aggressive expansion for profit lending is not a good practice, and it will backfire. And because they forgot about their original mission, and they went into very hostile collection, using threats, etc., they lost their social capital and of course the trust with their customers. And also, the regulators have to come in, and then it took us 6 months to eventually stabilize the situation. I mean, the regulation and us. Our collectors can only start going out. This is on retail. I'm talking about on retail banking perspective. 6 months after. So for that 6 months, we took a higher loss rate for that country. Okay. So again, reflection questions. What I want to leave with you and talk about this. How would you respond to aggressive business target or collection target when you're under pressure? Think about it. So when you think about those challenges, it would help you appreciate the stress that your employees, your collectors are facing. Okay. If you are SKS, what would you do to avoid SKS mistake and avoid their reputational damage? And for the Association of Banks in Cambodia, maybe you can think about taking the lesson learned, get an understanding of your market, maybe promote more education. That's what you're doing right now, which you're on the right track. Just want to leave this here for you. Lastly, very quickly, just want to touch on some takeaway. Then I'll open the floor for a Q&A. So it is very critical to remember the responsibility you have in the market. So be responsible lending. Know your portfolio. That is very important, because when you know your portfolio, you know what are your loss rate. Although the delinquency or the high risk portfolio, if it's still staying within your projected projected loss rate, then you have more flexibility to provide some discounts or some leeways on the repayment plan. Okay, the customer need to be able to continue to make a living. They need to be contactable in order for them to make payment back to you. important to maintain social capital, build up on the social capital, help them because you're invested in them, they're invested in you, we're in it together, and build trust with the borrower through good practices. Okay. And balance financial sustainability with the welfare of the borrowers, right? Engage the communities and be flexible on your collection strategies, on your default handling. Provide the educations as I highlight again, and learn from the case study that I shared with you. Aggressive collections harm borrower trust and it can backfire. A customer-centric, community-focused strategy, understand the customer affordability is built for long-term. It has very good long-term outcome. Okay, that's all I have on the slide. The next one is on Q&A. Maybe I can stop sharing so that I can see all of you. I'm open for questions right now.
Yes, Sinh Chang is please, how to facilitate the discussion. Thank you.
Thank you. So, any questions from the audience or comments? So, thank you, Pauline, for very good insights. And you say trust is the key. The best collection is a good credit policy and things like that. So, those are basic principles. And for the information of the audience, we are planning for a 2-day training on debt collection, probably in the first half of next year. So we will go into more difficult things. Some of you may remember that probably around 7 or 8 years ago, we have a 2-day training on debt collection in Phnom Penh. But those people are now probably already vice president or at least a general manager of department now. And so there's a new generation of bankers and lenders here. So we can do another training sometime next year. So now, can the IT person open out the microphone? Or you may raise your hand if you want to speak, and then your microphone will be open. You can also put questions on the chat. Collection is a very big topic, and I'm sure there are many questions. And there are certainly many issues at the moment. Thank you. Yeah, there are some questions coming in.
Let me see.
There are several questions. Let's start from the first one.
How
to build good relationship with the customer who has been bankrupt.
So when they have gone, that's why we try very much if we can, not go to bankrupt if we can with the customer, because the moment, depending on the country also, on the registration. So certain country, the insolvency regulation, they will say the moment the customer going to bankruptcy status, the bank cannot interfere. Stop everything. And then a central authorized party, typically formed by the legal firm, they would then they will be the main mediator between the client and us. So all banks stop. So there's very little we could do. That's why a good strategy for you is get to them earlier before they get into that stage. I'm just gonna pick some the other questions. Second one, when country indebtedness crisis, some client take advantage. Yeah. Very, very true. So when we issue a regulation, we also have to be careful in terms of how we release it and also what they may be impact. There are so many people with different behavior. They will bound to have some customers who want to take advantage of that. Like the India case I talked about earlier. when because of the virus situation, a lot of banks don't dare to do collections, or they don't go on to few collectors. So they know the bank are not coming to collect money. So there's like, it's not that I don't want to pay you, you don't want to come and take the money from me, it's your issues. So they are client like that. What we can do at that stage is, I mean, thank goodness, hopefully those are your smaller segment of your portfolio. And remember, I talk about you would have measure your credit loss, you have certain areas. So these may go into that. You can try to negotiate with them, you can talk to them. If they refuse, there's nothing you could do. But use the other ways to prevent them get to that stage. Okay. But in my experience, generally people like to pay back. They don't like to owe that. They don't like to be in that situation for too long. Do I agree that more aggressive on lending costs? Yes. So we will talk about, I mean, when we have, maybe I think Chin Cheng, when they have the collection workshop, you sure will hear from that. So typically, if we look at the capacity, that means people, number of collectors you need in the collection shop, what do? You look at the volume of account that pass due, right? Because the volume of account that pass due will tell you how many people you need in order to handle. Yes, if you have aggressive lending, maybe we need to also quantify what do we mean by aggressive lending. If you are eager going out, but you are responsible in your credit policy, that means you are offering the loan to the right group of people, then the collection issue will not happen. But sometimes you could have, economic shocks or crisis, the delinquency comes in. But however, if you are loaning properly, meaning that you provide loans to people who can afford it, they bounce back quite quickly. So I agree with you, but there are certain things we need to quantify, and there's also certain things we can do. Okay. Liquidate. Okay, property. There's no best practice in the sense that whenever they pledge a property and when the customer couldn't pay back, or maybe, okay, I'll share with you my experience and our practices. The last thing we will do is auction the property or go to the court. Of course, you first send the legal warning, your foreclosure reminder will go in. You can foreclose the property. That means let the customer know, I'm serious, you could lose your property or you could lose your land. Then they will come and have proper conversation with us. But rarely we will go into auction unless we really have no choice to go into auctions. Because once you go into auctions, after you get the money from the auction, if you still have outstanding amount, the customer wouldn't pay. They wouldn't, because you already auctioned their house. And it's very unlikely you can get that back. So normally after we foreclose the property, the customer would be willing to come and talk to us. Then we will really work out with them. Sometimes they will go and maybe borrow money from their family members, or they even sell the property to their family members so that they don't entirely lose it. And we find that way, you have a higher chance of getting your money back, and also you can retain customer at the relationship, because we have SME customers where they need to sell their offices. Actually, he pressed his office as his commercial office as the property, so we have no choice but we work with them. But we work with him throughout the whole time to restructure the loan. Eventually his business come back up and he became a normal customer with us. So it's work with your customers. Okay. Pauline,
so go back one more question. So
right.
Someone asked you to repeat the good collection practice tips.
Okay.
I think you run through probably too fast.
All right. Okay. So the tips, actually, that was a very interesting experience. Firstly, we're doing something that not the normal collection. If you're familiar with collection strategies, we will group our collectors by the age of the delinquency. That means the age of the customer or past due, 30 days, 60 days, 90 days, etc. And we use junior collectors on the early stage, and we give very structured, because we are mass borrower. So we use very structured process to collect the money. We always give our collector a target. That means within this month, you must collect back X amount of money. So you can imagine our top collectors, they're very good in using, working on target, like sales, but the opposite, they're collecting money. So they have given target. Suddenly, when we bring this top collector, we say, you don't have sale, you don't have the collection target. Your job is only these three things. They were lost. They were really lost. And the manager was going after me as well. Pauline, how can you take my top collectors and then my flow is affected and you take them to take care of the high risk portfolio? But the high risk portfolio is also those customers with a larger balance. Okay. So the tips is empower your people. So initially we have these collectors, they were totally lost. They don't know what to do. You support them, let them know you mean it. And the other thing is, because collectors' income come from partly commissions and partly base. So you have a base income and certain percentage commission, and the commission is based on the amount they receive back, right? So, but we're getting them to chase after this, go after this very high risk portfolio. The payback rate is so low. You don't want to impact their income. So the few success tips that we have on this strategy is, first, we select the top collectors. We rest their mind. We give them a fixed income. We say your income will be fixed based on your last 3 months average, because these are top collectors. So they don't have to worry about their income. Then they focus on the customers. We have no restriction on talk time. So they can talk to the customers as long as they want. But the key thing is they must get the customer to tell them what is the issues. So when we first call this customer, you can imagine most of them are uncontactable. So the collectors try to SMS them. We say, we understand customer may be impacted by the economic crisis. We have some payment scheme, we have some payment program that we may be able to help you. So we reach out to them in a helpful message. So immediately, one of the customers that was missing for 90 days reply back to the SMS and say, can you tell me more? How can you help me? Now, this person has been missing for 90 days, but because we reach out our hand to help, they write back and say, how can you help? So we say, okay, we're going to call you right now. Can you pick up the call? They say, no, tell me on the message. Now, can you imagine on the phone, the fear the customer have? They're worried the moment they pick up the call from us, we're going to pressure them to pay again. So this is what they face. So the reason I'm sharing with you on this is, sometimes we're so focused on exercising our job, exercising our right, we forgot the empathy part to understand our client situation. So we call them care officers. We give them a very nice name. Care officer stand for Credit Assistant Resolution Executive. We don't call them collector. We give them a good name so they feel proud about the job. It took her, the care officers, think back and forth on SMS like 10 times until the customer is confident enough to pick up the call and talk to her. We also have one customer that saw the message and turned up in the office the next day. So that's the tips is secure their income so that the collector income so that they not fear. Reach out to the customers with a helpful, sincere message and truly mean it. They call back and they pressure them to make payment. Give very clear objective to the care officers or the collectors. Basically, let them feel proud what they're doing. So what they do is they talk to the customers, they understand the situation, they came back to us. Because we have we're collection policy, we have policy that talk about payment scheme, how much you can discount and all that. But a lot of this, it may means that I need to come up with policy on the spot. Literally, the first country that we launched was in Malaysia. And I was in the office with them for the 1 whole weeks. As we speak to customers, we keep refining our strategy, how to reach out to the customers, and I give them empowerment. For 6 months, I implement that strategy across 9 countries. And I was personally coaching them. Every day I have an hour talking to them and helping them to solve their problem. This is how I get the benefit. I hope that answers your questions. So I go down one more from there. It's about PTP, promise to pay customers. Okay. If you track your cure rate, that means how many people pay and go back to normal. Okay. So or payment. So if you find out that you will find if your paid rate, so the number of people pay on the day, so you create a graph on the x-axis is your payment rate. I mean the y-axis is the rate of the payment. The x-axis is the duration, how many days they take to pay you back. You'll find that the payment rate or the cure rate will eventually stable down because people stop paying. Those are the ones that will likely go even further delinquents. So you need to track every cycle. That means you break your collection cycle into every 30 days. But it also depends. If your payment plan is shorter, then you need to track them shorter. Because your payment plan is shorter because 1 month may mean a lot. But retail banking, our general practice is 30 days. And we have mass portfolio. But if you have a shorter payment, shorten that. Because I need you to track your cure rate and see when it starts stable down. That means the line becomes straight line, which means you need to come up with different strategy. For those that have high payment rate at the beginning, you don't need to get your collection to call them. You can start using maybe SMS, etc. The main thing is when you call the collectors and collect the payment, or even you visit the borrower and you ask for promise, you should understand roughly the customer situation, especially for microfinance. If you know your customers, you're on the route, you roughly know where the income comes from. You will gauge the promise to pay, how genuine it is. In terms of retail banking, what few steps that we could do, we can ask the customers, can you tell me again how much you're going to pay me? Can you tell me again when you're going to pay me? And then you repeat the same thing. Thank you for agreeing to pay. You have agreed to pay this amount. You agree to pay at this date at this time. It just reinstate the commitment. You can do that. But if the person keep broken promise for a few times, you need a different strategy to deal with those. You call habitual broken promise payee. Then you need a different strategy. So it's a lot of this is why I love collection, because it's both an art and a science. You need some analytics, some data to help you. You also need to have some soft skill, because you're dealing with human. And the human behavior change when the economy changes. Okay, I hope that answer your questions. Okay, now I think that was exactly the point I was trying to make. Monetary penalties doesn't work if the customers is badly in debt. It only works for people who forgot to pay or who can afford the early stage. The early stage meaning the first 30 days or even 60-day bucket, depending on your portfolio. It really depends on the quality of your portfolio. So you need to check your curve. Beyond that, it doesn't work anymore. Because like I say, you're just increasing burden. And honestly, when the customer is delinquent, they cannot pay, they can't even fulfill their usual interest. Increasing interest, you're just having an illusion that you're going to make more money, because those interests, it's unlikely you can get back. If you can get back your own principal, it's already a very good plus. So monetary penalties only works for reasonable good customers. That means they're just forgot or things like that. Beyond that, it doesn't help. Make sure, do we need to make more loan disbursement, macroeconomy issues? What do you so you're saying that should we provide more loans if we want to simulate the market? You can, but what we are talking about the whole session is on the affordability per individual borrowers. You can provide more loans. You can support them provided they can afford. if they cannot afford, you're actually getting them into heavier debt, into deeper trouble. Okay, and when a person in such a heavy debt situation, it can be quite disastrous. I personally have an experience. I was taking a taxi ride from Singapore, one end to the other end. The taxi ride is rather wrong. So the taxi driver was asking me, "Oh, this is a very long ride. Do you mind I talk to you?" I said, "Yeah, sure, chat with me." And he was just talking. And so for some reason, he went on to share with me his indebtedness situation. He said, back in a few years' time, I was so badly in debt that I have no money to pay. My wife left me. I have 2 very young kids, and he need to look after, he say. And resulted because he need to look after his very young kid, he cannot do his usual work. So he ended up doing just small little work here and there. So his payment abilities again dropped further. Then he's to the extent that he can no longer pay electricity bill and water bill. So, and he was having dengue fever. One day he got dengue fevers and he couldn't even go to see doctors, and his 2 boys was crying next to him. And he was so depressed that he was even thinking about taking the 2 boys and jump out the window with him. So I'm sharing with you this story is more of like sometimes it can be that bad. So do be a bit more empathetic to understand the situation. So you can give up more loan, provided you're giving up to people who can afford it. Communication, negotiation.
Pauline, so on the previous question, so the Cambodian economy now is actually under pressure. They have been under pressure for some time. So I think that's why they asked the question. So typically in this kind of situation, lenders will be more conservative in lending. They will try not to lend too much. I do not mean this is the regulator policy. Actually, regulator want you to lend more, but the natural reaction of the lenders is to be very conservative under that kind of situation, and then but there is something that lenders can normally do is they can extend the payment period. They can have a new payment plan and those kind of things. I understand the borrower's situation. And so it's not exactly that you make more loan in order to tie over the old loan, although you can renew the loan and whatever, extend the payment period. So those are the type of things that people can consider. But if you want to make more loan, aggressive loan, maybe, I mean, if that's your strategy, so to occupy the market sometimes. But the chance that you are going to make big loss is also high.
Yeah.
What I mean is the individual lender level, not the macroeconomic level.
Yes, agree. Thanks for that clarification also, Chin-Chan. That is also one thing we learn. In crunch time like this, lenders tend to tighten their policy, and they tend to borrow or loan. They tend to lend carefully. Now the trick, the good practice that I've learned is not to stop. If you stop lending, that will be a issue because your book is shrinking. Because the market is not doing well and your book is shrinking because there are people who cannot pay. You need to continue to lend, but lend carefully. Lend to people who can pay. Of course, you still have to take some risks, but take the risk that you can afford. So know your risk appetite. Know that's the key. Yeah, we also learn from past experience. When we reduce so much to the extent sometimes we stop certain market, actually that's not a good practice. You actually are making it worse.
Yeah, Pauline, I got one question regarding to the current situation in Cambodia. Now, most of the borrower in Cambodia, they all not only face up with the MFI or financial institution, but some of them, they also face up with private borrowing, private lender. For during the economic crisis, like current situation in 2000, from the COVID pandemic up to now, And is that your country also face up the kind of problem like in Cambodia? Like let's say they not only face up with they have loan with the MFI, also they have other loan with the private lender. So how to collect recovery the debt collection?
So the private lender, I think we do have some of them we call underground, and they are everywhere. They're everywhere. In the bad time, I'm just gonna tell you a situation that I encountered in Hong Kong during the bad time. That was around the year 2010, right after the crisis, even up to 2012, 2013. They are the money lenders. They were providing such a good service. They call end-to-end service, where they work with the borrower to go and get the payment scheme from the banks to pay themselves. They even help them to the extent they even help them to go for insolvency. They may go for bankruptcy when they really cannot pay back. They are there, and they are very creative as well. For bank, we have our code of conduct, we have our regulation, we also have our social responsibility. It's very hard. I don't think we can ever compete with them because they will go hostile, which we don't encourage. And I think the regulator would hopefully could come in and put tighter restriction on them. I don't have a good strategy to tell you that my strategy will be better than them because they will use hostile and we don't. However, like the example I highlight with the customer callback and apologize, if you have the strong relationship with the customers, they will find way to pay you back. So the customers call our collectors and say, sorry, I can't pay you today because the underground money lenders came to my house and I have to pay them and they were hostile. But he said, I will pay you in 2 days' time or in 3 days' time. And they did pay. It's an uncontrollable situation. I mean, I would say unfortunate situation. If the customers are not educated, so this is another way. If we have good education system from the regulator as well as the FI, if you can engage the community, provide them that good education so that they can avoid going in. But a lot of time they went there, nobody would like to go there. But I think they also jolly well know what are the tactics they use. But they are just hard pressed with the pressure coming from all the others financial institutions that they cannot pay back, and that's why they have no choice but to go there. Yeah, I'm not sure whether my answers help you to understand, but yeah, it's a unfortunate situation that we have in the market.
Yeah, Pauline, in addition to what you say, I mean, there are several other points. So in the case of Cambodia, so sometimes when people say informal lender, they are actually formal. So like pawn lending companies. So remember that pawn lending company in Cambodia are actually licensed. They are licensed by MEF and now the non-bank financial regulatory authority. So those kind of lenders must join credit bureau so that they are lending because all the borrowers' debt become transparent. So remember that fundamentally, the job of the credit bureau is to come up with the overall indebtedness figure of the borrower to the extent possible. But no country can get to 100%, not even in the United States. So, but to get to like 90, 95% is possible. So in Cambodia, some of the lenders are not yet joining the credit bureau. We have been keep saying this for many years. So hope that the others can also to help to push. So this is number one. Number two is for those that are not really licensed, like the retail creditor, in normal country, they also join credit bureau. Retail credit bureau, creditor, these are like the supermarket, department store, electronics seller, and things like that. They must also join credit bureau. So, but there will always be cases that they don't join the credit bureau or they cannot join the credit bureau. Then there are other ways. The other way is in nowadays, since at least a decade ago, apart from credit bureau, and outside the credit bureau, there is a new industry. This new industry we normally say is data and data analytics industry, or simply say data and analytics industry. And they are actually in a way already in Cambodia. So Banji, part of the business is like that. But in the good markets, this kind of data company, they have many information, which they will typically say that, okay, I help you prevent fraud. So one of the things they have is they have some borrowing information outside the credit bureau. So for example, they may have installment purchase on the e-commerce platform or whatever. So they have some data that they can get, which will supplement the credit bureau data, which will make you know that, okay, this borrower is already overly indebted. So there are certain ways in normal market to prevent you from lending to the overly indebted borrower. But having said that, if you are loan officer want to purposely lend to them because their income depend on it, or they want more bonus, that's more your internal issue, internal governance issue. So, but officially, formally, there are ways. So this is one thing. After you have made the lending and you discover that, okay, they have some informal borrowing, and before you did not know that, there are certain ways depending on the country. So if you have if you have a good judicial system, which I know is a problem. So in some countries, the lenders will nominally take the borrower to the court and will have certain content in their case in the court. So in those cases, then the informal lender typically will emerge, because the informal lender, they also need to participate. If they don't participate, they may lose the borrower's asset, or they may lose it in other ways. So there are certain that like strategy that can be done. And in some countries, which will actually help them also, the local government actually create registration center for informal lending. You cannot prevent informal lending, right? But under the general contract law or under the civil code, one individual can always lend to another one. So I can lend money to, let's say, Hein Kuai. I can lend money to Camera. The law allows that, so nothing prevents me from doing that. But if I want better legal protection, I can register my lending. And there are local governments registration center on that. One of the jobs that we do some years ago is we call in these people to have meeting together with the credit bureau and saying that, okay, you guys, the registration center, you guys need to put your data in the credit bureau. And then you are members who register their informal lending in your center, they can also search on credit bureau. So I don't know whether today CBC is here or not. CBC is the credit bureau. So some of these are the ideas that in future that can be done. So indeed, it is not something that cannot be done. So there are certain things that can be done. Those related to when you made the loan, and others related to after you made the loan. But some of the things depend on your judicial effectiveness, which I know is an issue in Cambodia. So I have given some ideas that you can consider. So in developing country, this is very normal. So do not be surprised. Not only in Cambodia, in other countries is the same. So you got to find some way to do it. But the most important thing is in the beginning, do not lend to the overly indebted people. And how do you know whether they are overly indebted or not? There are multiple ways to know, right? So I will pause here and then we can continue. Thank you.
Okay, thank you. I think credit bureau also go through a period of learning. The more information that credit bureau can provide to you, the better you are, because so that you can make that informed decision. And also when you meet with the customers, you can also ask them. Sometimes they will let you know, especially when you have that restructured loan. And that's also the time that we find out the customers sometimes they not only borrow from the formal lender, they also borrow from informal, and then we work out the repayment plan with them. Okay, I have a question here that talk about why some institutions do not go to write off, and then they have rolling loans at over 360 days. I guess these come back to the institution's responsibility, because by having I would say risky actions like this, because why we write off loan is so that we can also demonstrate to our stakeholders the quality of our portfolio. Okay, for those that like unlikely can pay back over a short over the set period of time, we write them off. The cost of doing the business. When we define the product, when we define our credit policy, we already know what kind of loss rate we can sustain. Okay, so that's being responsible. But if we do not write them off and we roll over the loan like a new loan, basically what we're doing, we're hiding losses. In some country, the registration do not allow that. When they do the inspection at the institution, they will say, hey, what are these loans? How come they are so old? So some registration do inspection and find out. Certain country, they will not allow these features like roll over. Okay, those are very risky actions. Organization who do that, basically you are accumulating a very big portfolio of bad loans, and in time that is economic shock, this is the one that will go down. And if you don't monitor them, you will suddenly hit with a big loss rate.
Pauline, so I think I need to go back to the one that we left. So there's a question: do restructuring loan is the best way? Means does restructuring loan is the best way to build good relationship with the borrower? And before you go there, I think somebody want to speak, right? Mr. Cho Kong, I think you opened our camera before, so you want to speak? Mr. Cho Kong. Okay, fine. Then we continue.
Okay.
Yeah, let's start from this restructuring loan is the best way or not.
Building relationship is to work with the customers and find out the loan that's affordable to them. Actually, the building relationship with customers is over a period of time, right? How you reach out to them, how you work with them, make them understand the loan that they're getting into before they sign the agreement, and then eventually they sign, they disperse, and how you support them throughout. That's how you build relationship. Including one of the suggestions I have was like engage with the committees and like being there, educate them, provide your support to them. This is how you build the relationship. Restructured loan is not the best way. Well, it's just a way for you to help customers who need it. Okay, you don't give it to anyone. Like payment holiday can create bad habit. So payment holiday, we will only have payment holiday when it's in a very, very serious situation, like a natural disaster. Back in year 2010, there was a very bad flood in Thailand. I think in early 11 or year 2010, there was a very bad flood. It was such a heavy rainfall, it flooded the whole of Bangkok. And a lot of the businesses was impacted. And to some extent, some of those manufacturer like the Siemens, those hard disk manufacturer, they were also impacted. Toyota cars were damaged. So it affected the economy quite bad. The government wants us to provide payment holiday. Having said that, we don't give payment holiday to everyone. They will tell us specifically which are the town or location that was so badly flooded, people cannot move out from the house. Those are the ones that we give payment holiday, and we don't give them more than 3 times. We monitor them. So some of these incentive, or not really incentive, one of these debt relief scheme, you have to give them carefully. You give them to the one that really need it. If a people to come and ask for restructure loan, we find out about their affordableness, their indebtedness situation, and you only give them if this plan is going to help them. Remember the case I shared about, we also reach out to other banks in order to come up with a consolidated repayment plan for these customers. Because if I'm the only one who gave restructured loan to these customers, I give him some leeway, but he may get pressure by others, or others continue to give him debts and increase his indebtedness. That will not help. Another point I think I forgot to mention, so when somebody has in restructured loan, we actually, as part of most of the regulation, they will want us to report the customers who are in a restructured loans agreement. They will flag it in the credit bureau so that other banks will know, oh, he has a restructured loan, don't lend him anymore because it will further burden his indebtedness. So you only use it wisely. It's a good tool, but use it only for those who need it. And you have to also find ways, and this is where regulator can come in to help, prevent the person from taking more debts. Giving them some room to breathe doesn't mean they can go out and get more. Sometimes they do when the pressure comes. Hope that helped, and I'm coming down to
Communication and negotiation.
Yes. Could you just catch up with this one? We typically have the communications based on, I say risk-based approach, meaning based on the age of delinquency. You know, if you monitor your cure rate, I would like you to monitor your cure rate and break your portfolio into different age of delinquency. Big amount, like secured lending, because you have a collateral, you can look at it on 30 days, but you will see that the payback rate is higher. So there's difference between secured and unsecured. So typically our strategy would separate by secured and unsecured, because the secured tend to pay back higher, the unsecured at higher risk, and then we go by age of delinquency. And after the age of delinquency, we also break it by risk. So within the age, let's say the first 15 or 30 days, we also look at who are classified in the higher risk tier. So if you have analytic in your bank or in the institution, you would score rating them. Okay, you rate the score. And then from there, you can then look into the very, very low risk one, the early stage. You can sometimes just give an SMS, a simple reminder, they will pay, because from past history payment behavior, they will pay. And then the one that needs some call, then you use human call. So human calls is still better than SMS, but it's more costly. Field visit, again, is the most effective, but again, is the most costly. So you have to wait what is the best strategy to use. Hopefully that help you to answer what I have shared earlier on all these different.
Yeah, you mentioned about scoring. So actually, correct credit bureau typically provide collection scoring as a product, so that you know, I mean, how much effort you need to spend on certain customer, and then how less effort you need to spend on other customer and things like that. And as I say, outside credit bureau, there is a new industry. So data analytics industry, they also provide collection scoring, and then use their inputs. You can also have your own internal collection scoring, so that you don't equally spend effort on all the customers, so that you know where to spend more effort on certain customer. So, but all these more sophisticated things, you will take time to come to Cambodia. So I mean, I don't know whether credit bureau is here or not. So camera. So in future, if something related to credit bureau, let's remember to invite them. So they could eventually develop some collection scoring. And this market is already large enough with more than 5 million retail customers. So, but those complicated things you will sophisticated things, you will take time.
Yes,
Yeah,
yes.
Yeah, camera.
Yes, Chin Chang, I just want to say, I noted on that on your advice to involve the CBC in related topic in this next webinar.
Okay. So I'll continue. The next question is on cash flow. Currently this is not good.
There's one up there, not yet done. Bank and NFI had assigned the loan classification from the regulator. MBC is the central bank. He say why some institution cut to write off and some do not. So go ahead.
I sort of touched on this already earlier about you've got to be responsible on your own policy, because when you roll over the loan is very dangerous. It's a very risky strategies. We cut over because we want to be responsible to our stakeholders, because those are basically part of your credit risk assessment when you know you're going to take certain percentage of risk. So be responsible and write them off, because you cannot put them in the book because it's the quality is not equal to the rest of your book. So typically you write them off, and then you have a recovery strategies that look after the post write-off customers, and then they have a much more flexible payment plan because they're already written off of the book. In fact, if you have a good, because the customers doesn't stay, maybe I can touch a little bit on the recovery strategies. The customer will not stay forever in the situation they're currently in. Let's say they currently cannot fulfill the repayment scheme. When they're written off, you already write off from your book, you take it as loss, and you put them into a separate bucket and let a very flexible payment scheme, you give it to them. Sometimes they revive because their business come back up, and then they come to us and say, hey, I have money right now. Can I pay off the debt? Now, in the credit bureau report in some matured country, we also record who has a written off loan. So other than restructured loan, they also say this customer has a written off loan. These information are all helpful for the new lender to know, okay, this person likely over in debt, don't loan anymore. So they will come forward because of this credit bureau record. They will come to us and say, hey, I have money now. Can I please clear my status? Because they want to clear the write-off status. Then they can go to creditor and get more loans. So that encourages them to pay. So there are times where although we have written off those portfolio, they're in the book, but because they're not so bad customer, just because they're impacted by the the current situation or the economic situation, they can become good eventually. And whatever we recover back on the recovery book, right? Because we did off them previously, it become a revenue for a future. Okay, so it's a surprise revenue that we get. And even if you want to, sometimes bank do sell the old debts because no point sitting there. They want to reduce the cost. They can still sell it at a pretty good amount, if pretty good value, if they have record that shows that, hey, although we give a very flexible payment scheme, they continue to pay back. So those are all responsible practice, good practice you should have. And if the organization decided not to record the write-off and continue to roll over, basically it is a time bomb. It's just a matter of time. When the crunch comes, the loss rate, this whole pool will all flood in. So that's how it is. And then you may not have the collector to manage them. Okay, it's just a responsibility on the institution side, which strategy they should take.
Yeah, in addition to what Pauline said, there are two other things to consider. So one is the accounting policy. So typically the accounting standard has something for financial institution accounting. And you will say something like, okay, if the borrower has been delinquent for under accrual or whatever, for a certain period of time, you need to write it off. Or if the borrower is in such and such a situation, you need to write it off. So accounting standard is something that you need to take into consideration. And then the other factor is tax. So remember that if you write off a loan, it's a loss to the lending institution. and the loss can be deducted from the income. And that means that you will need to pay less tax. So you can benefit your institution. So there are several other factors. So it's not as straightforward that, okay, why not write off and why write off or whatever. So in some countries, actually, the tax authority is afraid that you are written off too many loans in order to benefit from the tax. So they sometimes have some limit about, okay, in a year's time, what's the maximum percentage of loan written off you can have. And in the time of crisis, typically some of those limits can be relaxed temporarily. So there are things like that. So and again, if you need to write off, please write off, because that's a good risk management practice. Do not simply carry over. Yeah. Okay, next question.
I think the next one is on cash flow. Yeah. So basically this come down to this the affordability. So when we work out affordability, we basically look at the net disposable income. What do I mean by that? Meaning that the loan obligation plus the compulsory expense, do they still have any more cash in order to pay back this loan? If not, then they will have to find ways. So when the cash flow is back, so let's say on an SME experience, let's say this is a business. So what we do is typically we will then talk to them about restructuring the loan. So if they, because at the end the person must be able to still feed himself at the same time pay back. So we will work out with the customers to see what's the level income that they get, what's the normal cash flow, although the cash flow get affected. And then we look at, do they have any means of getting some income somewhere? Or maybe they might have to dispose some of the assets so that they can have some money to reduce the loan, to restructure the loan. So those are the conversations that we need to have with the business to understand what will make sense, what will be workable for them to continue with their business. Because if their business have to shut down, then it's, very low chance that they can be able to help us. So we need to work with them. That's why workout loan or restructured loan for the SME is very common, or the businesses. Whenever they have challenges, they will meet their lending officers and they will start to negotiate. And sometimes we may, like to Jinjiang sort of touched on earlier, we may request for like a reduced interest rate for them at a period of time. But we will have to agree to say, okay, maybe I reduce interest rates at a certain period of time. And then the moment your income start to come up, we increase again. Or we say over 6 months first and see how it goes, and then we will increase. So these are all the tactics that we can use. But fundamentally, the customers have to be willing to come to us, work with us with a solution. Yeah, it happens.
Yeah, I more to this question. So Cambodia is not yet a very mature market, right? But in the relatively more mature market, so when there are a lot of non-performing loan, NPL, so you can sell it to the asset management company. So asset management company will buy your NPL in bulk. It means like a big chunk of it, like a portfolio of it. And then they will try to turn around and then restructure the borrower and then get some money back. So suppose you have $100 non-performing loan, they may buy at $30 or $50, and then hopefully they will restructure and collect on like $60, and then they make some profit on it. So this is one way. Another way is in normal country, there is a big industry which is called third-party debt collection industry. So we mentioned this before in Cambodia, but I think most people here might be a new generation of bankers. So you may not know. So this industry eventually will need to emerge in Cambodia. So third-party debt collection company is a business, is a very profitable business actually. So you can sell your loan portfolio to the third-party debt collection company. Actually, on my mobile phone, I have several the public site on social media about debt collection. So I see this selling and buying all the time. So retail portfolio, typically they sell it at very low price, like around 20%. And then debt collector, third party one, they will collect on it and then they get 40% back. And then they make a fat profit of 20%, something like that. So these are very common, normal business. But no one has come to set up such a company in Cambodia. And even in those countries, even in developing countries, I'm not mentioning the developed countries, you can issue bonds based on non-performing loan. Remember, non-performing loan is simply a loan receivables. Receivable is an excellent collateral. So based on those collateral, you can issue a bond on the capital market. Essentially, it means that, okay, I issue a bond based on my collateral, and collecting on non-performing loan is my business. So that I have new money to buy the new non-performing loan, then I will collect on the next one. So it's like a rotation and rotating business. So there are all these possibilities. But this possibility at the moment is quite small in Cambodia, unfortunately. So the market need to develop further. At the micro level, it means working out by the lenders alone. And Pauline already said several things. And so try lots of things, but at the market level at the moment, there's not much yet available. So this is like, okay, people need to understand what is necessary at the market level and try to develop it. Hopefully it will come in the next 10 to 20 years. So, but has a view to the future first. So lenders work is not the only work you can do. There are market level things that are possible. So let's continue. So the other one is if a customer have frowned and didn't appear, it means you cannot find the customer. What do you do? Again, credit bureau has a product. That kind of product is called skid tracing. Skid tracing, it means, okay, there's a borrower who is called Camara Ross and the lender. I cannot find Mr. Ross anymore. Then credit bureau somehow will be able to find him. Why? Because if a credit bureau need to live in modern society, he will put out somewhere in financial institution for payment or for other things. So there is some way to find Mr. Camara Ross, something like that. So that's and then for Pauline to do the normal answer.
Yeah, so other than the credit bureau, I think Din Chang also mentioned about collection agency. So some of this, because internal collections is typically higher cost than the collection agency. The collection agency, we pay them only if they recover, they found the customers. So you can pay agency to look for the customers. That's why the community engagement become very important. When you have a close-knit community, sometimes the leader will tell you where they are. Or I think in some markets where the town is very small, suddenly a stranger comes into town, they will know this person doesn't look like from us. So some of the collection agency, they operate in town that you don't operate, or they can find the customer for you. But again, this venue may not be available in Cambodia, but those are the technique we use. Because you call, it's not going to get the customer. So these are the skip tracing customer that we will park aside. We typically put aside, and then maybe after a while we recycle again. Then maybe we try to call again. But we typically use a few techniques that I mentioned to try to find the customers. So the next one is, okay.
Whether this should be under a separate unit or not within the lending institution.
Yes. So we typically, because like I said earlier, the technique we break by age of delinquency. So the focus on the pre-charge off customers normally is a reminder at the early stage, then negotiation, potentially restructured before write-off. Because if you can help to, although it's a restructured status, prevent the customer go right off because you don't have to record it at loss, you do that, right? And then if really all the internal policies or even government scheme cannot help them, with no choice but to write them off, then on the written off, you have more flexibility. You could find even better payment plan to serve them. So the strategy is typically cut into this segment. So we typically say in retail, we say pre 90 days, post 90 days, post charge off, or recovery. So we say collection and recovery, because the post charge off, we focus on whatever you can recover, you recover. You don't care about the tenure because you already written off. Tenure doesn't play a part anymore. But you do classify them based on payment rate. That means for those that although pay very small amount, little amount, but they continue to pay, meaning they're contactable, they continue to pay. You keep track of them, you bucket them into different pool within your recovery. If later the debt sale buyer come into Cambodia, those kind of data will help you demonstrate the value of those portfolio, so you can sell at a higher price. Okay, so those are important. And our strategy is in the recovery is always we do a risk out, meaning we bring them out, we do some calls, we try to provide some payment scheme. If they cannot pay, we put them aside, rest for a while, and then we recycle again. You can also use collection agency to do that. So yes, although the whole department is collection recovery, but we have different team that have different skill set to work on each of these different buckets that I mentioned earlier.
Yeah, but normally after 90 days, you will be moved to your collection department, right? Within 90 days is still in the lending department.
Oh, for us,
You have 90 day,
no,
90-day cut off.
for us, from the day one, they go into collections already. In my past
Day
experience,
one.
day one. But the strategy, because is every age, basically we bucket by 30 days, but of course smaller loan you have to give it early. The strategy is different. The very early day is really like a reminder call kind of thing. It's very gentle. The first 30 day. The second 30 day is when we start telling them, okay, you really have to pay because you already come. In some regulations, in certain country, they would have classified 60-day is start to be more onto the bad book area. Normally, we define bad book is 90 plus. So most of my past experience, even though across a different country, day one, they come into collection shops already. But you have different team, different skill set. And we also uses different tools. Like the early collection, we use dialer, automated dialers, because you need some tools to fastly reach out the customers. For collection, one before charge off, we call collection strategy. The main trick is speed. You need to reach them sooner possible, because they don't just owe one institution money, they owe multiple institution money. If you are the first one who get to the borrower before another bank call, you may get your money first before other banks. So speed is important. So, but after 90 days, speed is not that important, because if you look at payment rate, like the cure rate, it's pretty much the same. So normally before 90 days, our payback rate could be very high. The X day, which is what we call first 30 day, the payback rate can be 80 to 90%. The 60 days, 90 day, it can come down to be about 50% or 70%. Beyond 90%, the payback rate is only about 10 to 20%. Then it's charged off already. So that's why you are really competing with time, because the more they went in delinquency, which also tell you the indebtedness of the borrower is higher, and also more people are chasing after them. So if you have good relationship, they will keep the money for you, and they don't give the money to somebody else. So this is where all the practices that I mentioned in the slide can come into place. Okay, so don't have money, can we? Okay.
So if borrower really don't have money, how do we recover? That's the next question.
So if they really don't have, I mean, okay, think about this way. For us, we have debt sales. So if I'm going to sell it at 20 cents a dollar, I must also collect whatever I can. So if it's really, really exception case, we can go for dispensation from the policy. For example, the house got burned down and the customers can't pay back. And you can't even do auction. Your chance of recovery is very low. So potentially we may work out a special deal with the customers. We may have to do, we call haircut or discounts on the loan and work out. Of course, the customers cannot go away from the legal obligations. For country where they use legal practice, of course, you use the legal suit. But if the property is not there, even the court may not be too hard on them because the person's house is already gone, So we will be expect to provide more lenient approach, including giving discounts to the loan, if it's really that way. Now, if it's not that, probably a responsible thing is let the customer slowly go into delinquent, going to write off, and then come up with any flexible scheme you can let him pay. We have scheme as low as paying like $50. $50 is a very small thing. We're talking about tens of thousands of loan. We let the individual pay $50 a month, a month, or 2 weeks. So work out something. Maybe they can pay $5 a week, even $5 a week we take, right? But you write off the loan if it's really that bad.
Let me ask Mr. Han Kuai, the general manager of the association. So, should we continue or we cut off at some point because we had passed the time? I know debt collection is a very big topic, very big area. As I say, we will have a 2-day training later, so where we can interact more. So over to you, Mr. Han Kuai.
Thank you, Ching Chang. I think it depends on our speaker and participants. For me, I'm fine. I think I'm fine. And to me, I think the last 2 questions that raised by our speaker on her slide, I think also very helpful if we have a few minutes to discuss about it, I think her question like how would you respond to aggressive business or collection target when under pressure? And then she also reflect the case of the SKS. So yeah, I'm fine if we all can stay. Yeah, I'm fine.
Pauline, let me give you some framework, and then later you can chip in. Then after that, we may close. So, and I'm going to give you some general information, and then we know that not everything is possible yet in Cambodia, but at least give people a long-term perspective of what is needed for the market. So, and typically, in some countries, debt collection has a separate regulator. So like in US, is regulated by the state authorities. So, and there are law on debt collection, there are standards, there are associations and things like that. So, but this is very far away from Cambodia. So then typically financial regulator certainly has a regulation on debt collection and also have guidelines, and these are available internationally. But this will take some time to come to Cambodia. What we are saying is that in the whole FCP, or Financial Consumer Protection area, the regulator will first need to issue an umbrella regulation. An umbrella regulation means set out the basic standard for the whole FCP area and creating the measures about what is expected from the financial institutions, and then set out a separate Directorate General in the regulatory agency, and in order to take care of this matter, because this require human resources and time, right? So this is more or less, I think this will come in the near future, which this is the basis. Then on that basis, then they will be standard guidelines on different area of financial consumer protection, and like disclosure and information, fair treatment of customer, and debt collection, and eventually later on personal data protection and things like that. So all these standards and guidelines will come. But we will ask people to be more patient, and this will take time. In any country, you cannot have like somebody just write something and then the regulator will just issue that something. So this will not happen like that. So this will take some time, but all these things are on the plan. So for debt collection, it will take some time. Then, and for the financial service association, like ABC or any other association, in typical country, they will also be something. So the association can have a committee on debt collection and can have guideline on debt collection, or at least a code of conduct. Actually, our team has helped some association develop code of conduct on debt collection before. And so there are things that can be done by the industry on your own. And actually, the association can also have rules for the situation with multiple creditors. So suppose you have an individual borrower, a small business borrower, and you have 4 or 5 creditors, means lenders behind, or even 3 behind. How do you deal with those kind of situations? Who will be the leader among the several creditors? So Hong Kong's association, they have something like that. So there are several things that can be done by the association. But we know ABC is now super busy with the market having some difficulty. So we also need to understand that this will take time and effort. We need some resources also. We have proposed that the association set up a subsidiary, which it will be called Financial Consumer Center, or FCC. And then after this FCC is set up with appropriate staff and a team in place, then maybe they can help to do something like that. Otherwise, with the very limited staff number in the association, they cannot do all the things at the same time. But keeping in the medium to long-term view, I mean, what is necessary from the association also. There are things that for regulator, there are also things for the association. And then we have been keep saying for some years that you will need a third party debt collection industry, and it's an investment opportunity. There are money that can be made from this industry. So, and then ultimately for the overly indebted borrower, they will need to exit. So there are formal exit and the informal exit. The formal one will require that you need to have a personal bankruptcy law, normally say personal insolvency law, with the judiciary taking the lead. This will be long time, and it's not going to come in the next 20, 30, or 40, 50 years. But there are informal one. We actually have helped some countries set up informal debt resolution schemes, and it actually works. But this will also need some judiciary people to take some lead. Remember, this is not the formal one. This is only the informal one. But still, you will need some government agency to take the lead. So this all will also take quite a long time. But we just want you to know that those are the things that are necessary. Otherwise, there will be some people, they will never be able to pay, and they will have difficulty to exit. Unless you are bank or you are MFI, just let them exit on your own. So these are the bigger framework that a market need to have in place. So we are trying to help bit by bit. So and hopefully, I mean, in the next few years, some simple things will be put in place. And I will pause here for any comments that Pauline may have. And then back to Mr. Hein.
I think Xinjiang, you summarized pretty well. There's pretty much a lot of framework that we see in a matured market. And yes, you're right, it's had to go through times and a lot of learning from the market also. So like in Hong Kong, we have, other than the credit bureau, among the bankers, they also form an association where they gather every now and then. They discuss about the challenges they face. They discuss about some of the trend that they see, and they help each other out. And that's why it helped us to do this, when I mentioned about this cross banks repayment plan. So I think what, other than, we hope the registration will come in with some policy on collections and having these third parties, etc., coming in. I think most important things on what I want to leave with you, and hopefully you can think about the answers, is know your portfolio. Okay, when we lend, we know what are the risks we can take. I mean, banks, we know when we a product, when we want to launch this product, we will say, okay, this product is going to cost so much, you're going to expect a return of this much, and this is potential loss rate, and then we, because of those information, we decide, okay, it's profitable, let's go for it. Now, when we make that product, we already know what is the potential loss rate. So it doesn't mean I got the product approved and that's it, I close my eye and let it go naturally. No, you have to monitor whether your lending has go beyond your risk appetite, meaning you assume you're going to have a loss rate of, let's say, 10% of or less than 10%. But, and you also set your portfolio size to be X numbers, because based on that, you estimate the loss rate. But if you're aggressive lending, your loan become much bigger, obviously your loss rate will increase. So if you already anticipate that, when you come to collection, we all mentioned about heavily debt customer who cannot pay, a repayment scheme, or really the one that can help them, you need to understand your portfolio. You need to understand your risk appetite. You need to understand how flexible can you be to support this customer. If you manage your portfolio well, you loan according to your strategy. This is your strategy. It shouldn't surprise you that your loss rate, this group of customer that cannot pay, is within that pool of your estimation. Now, if you go beyond, something must have shifted, something must have changed. Did you relax the policy too much? What is the matter? Could be economic, yes, could be economic situation that suddenly more people cannot pay, possible. But if you go by your own risk assessment, your policy and loan, economic situation will impact the pool, but it will not impact that much. They can bounce back in time. So like I said, you may write them off, they can bounce back later. But if you didn't go by your policy, you go aggressive, you ignore your credit risk, you still go aggressive chasing after the customers, because you shouldn't, you already cater this as your loss rate. So there's a lot of room that you can be flexible. So then I want you to reflect back, think about it and reflect back. Where did it go wrong? It's not the market, it's not the borrower, it is your execution. So be a responsible lender is what I say. When you know your portfolio, the question about how would you respond to aggressive business and collection target, you can push back. You can tell them, this is not in our product strategy. This is not our intent of going so aggressively. So knowing your book is very important. Well, the regulator can do a lot, while the borrower can do their part, but the lender, you have to be responsible to yourself for your own business model. I'm just gonna pause here, and then maybe I think I'll pass back to, is it Heng?
Yeah. Okay. Yeah. Thank you. I think we over like 20 minutes already. So Huyen, but I think before we close, I mentioned in the chat box, we do wish to hear the feedback from our participants, and also wish to hear like any most relevant topics for our future webinar. So just you spend like 1 or 2 minutes to scan on the QR, and then you can fill in answer in I think 3 or 4 questions only. Yeah, Huyen, the floor to yours. Thank you.
Hi, Bongkoi. I think Huyen is not able to stay until here as he has another meeting. So I will leave it to you and Xinjiang to wrap up and close the webinars.
Yeah, thank you. Xinjiang, the floor is yours.
Yeah, thank you. Thank you to ABC and thank you, Pauline. Excellent presentation and very good question and answer the contents. So, and we are very grateful for all the participants who joined this webinar. And as we say before, that we have a webinar series that will run for several years. So as you can see that in the big so-called FCP space, financial consumer protection space, there are so many topics. Even just on debt collection, you see, just a 2-hour thing, you can bring out numerous matters. So financial services is actually a complex area. So be patient if in one webinar you did not get everything, and don't worry about it. We had 2 days of training. There are actually tons of material internationally in this area, and we will gradually give as much as possible we can, and then gradually help the country build out the necessary things. But again, as I said, I mean, in the long-term view, there are many, many things that are not yet in Cambodia. So this will certainly take time and will need the government and the regulator support. And so it will not be easy, but with our collective efforts, including the industry, and gradually things will come, and then you will feel more comfortable. So I personally, of course, fully understand you have some difficulty at the moment with some high non-performing loans. And the most important lesson is actually not about collection. There's not much that can be done on collection once you have big issues. Is we have said since more than a decade ago that do not rely too much on immovables, on land and building. So now you learn a lesson. After you learn a lesson, hopefully you can change. People are normally seeing that housing price, real estate price is growing up. You believe that it's safe. These have been 200 years of lessons. It's not safe. Rely more on movable assets, which is tied to the production cycle. Reduce your reliance on land and building. Otherwise, you will have another lesson after several years. So this is nothing new. In all the country, they learn the lessons. So this is not exactly related to FCP, but I know there are some lessons going on. So we say it since a decade ago. So now you learned. Now you know how it is. When the real estate market goes down, then the bond portfolio will go down. So this is normal. So, but in any case, I think I need to sort out the issue in all the ways possible. Very sympathetic with your situation. We try whatever we can help. So I don't have anything more to say, and thank you all to the audience. So back to the host or back to Mr. Han. Thank you.
Okay, yeah, thank you, Xinjiang. I think come to the end. So again, thank to Pauline T for your wonderful presentation and also engagement response to the questions. I think a lot of questions. And also thank to the host from the ISC and from my team ABC for this wonderful webinar. So thank you everyone, and wish you all have a blessed Friday and also the weekend. Yeah. Thank you.